Good morning, good afternoon, good evening, and welcome to the slightly delayed start to the Tuesday, the 20th of December, Bull versus Bear webinar. Steve Miley on the call here for Trade Day. We're going to go for a usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at the events that are impacting markets right here, right now, fundamental macroeconomic events, and then we'll also take a look at the the charts. Before we do all of that, just to remind you guys in here, we have our next a technical Tuesday. So go to up here, resources. You're in the members area, okay, members.tradeday.com. Go in here, drop down resources, drop down technical Tuesday, brings you here. We'll be streaming live in here. So you just streaming live in here in 25 minutes and 23 seconds, okay? So once we're off the webinar in here, transfer across to this room here, and we will be doing the technical Tuesday. So looking forward to seeing you all for that. Right, calendar, what we've had, what we've got coming up. Bank of Japan, I'm not going to focus on that shortly. But coming up today, relatively light calendar. We do get housing starts later today, and we also get probably more importantly, but still a light piece of data really, API weekly crude oil stock data coming up 16:30. The housing starts data in just under an hour. So a relatively light calendar. Right, 5 things to start your day. The big one in here, Japan. Bank of Japan shock markets. They moved their yield curve control. So this is like a tightening of monetary policy, okay? So yield curve, the 10-year usually capped at 0.25%. They raised that to 0.5%. Sparked then obviously a move to higher yields. They've basically taken the cap off of yields. The yields went higher and the yen rallied aggressively. Dollar yen's down about 2.5% this morning. Okay. So it doubled the cap on yields from 0.25 to 0.5 on 10-year. So that's significant. What else we have going on? Donald Trump should be prosecuted for the US Capitol riots that we saw back in January 6th. Twitter will restrict voting on major policy decisions to paying tribute because the company owner must say in one of his first tweets. Okay, so nothing really impacting us there. Stock futures kind of mixed in here this morning, and we say we've got housing starts. So not much to in here apart from the big news with the BOJ. And if I go and look here, all the headlines I have are all on that. Bank of Japan yield pivot rips across global stocks and bonds. So the yen went significantly lower. 10-year yields also. So yields obviously going higher in Japan, but then it's encouraged yields higher across the bulls. So we've seen a spike to lower prices, higher yields in European and US government bonds. Okay, so this move to to higher yields in Japan, in leading to a push to higher treasury yields in here, a rise in treasury yields as well. Okay, so it's having a kind of a contagion impact. You know, the kind of the sole bastion of dovishness on the global central banks in here has now shifted to a more hawkish stance, and loads of articles on this in here. So yen surges as Kuroda's yield cap shop sparks normalization bets. Kuroda's shock is just a start of BOJ's risky path towards exit. Remember, BOJ hasn't been at 0% just since the global financial crisis, or close to that, as we've seen for most of the other global central banks. They've been there since the end of the last century, from the 1990s, where we had the zero interest rate policy. So a shift away from that is obviously of great significance, so over 2 decades. What else? Future subdued after Bank of Japan's policy surprise. Well, subdued on the equity side, yeah, but I say bonds in here significantly lower. Treasury bonds, the UST bond in here, the 30-year bond future is down about 1% in here this morning. So a significant sell-off there. Bank of Japan makes surprise policy. All of this is BOJ. Bank of Japan's Kuroda comments at news conference. Yen surges. So everything to a 4-month high. So that's yen up, dollar yen lower. And that's been the tail of the tape in here this morning. The other thing in here to note, Eurozone yields higher after Bank of Japan, right? So all of those. What is it? The impact on stocks in here? Well, nothing too significant here. We do have we're about flat to 0.25% down on European stocks this morning. FTSE, DAX, and the CAC, the UK, German, and French indices this morning. The FTSE pretty much flat. We're down about 0.25% on the German and French indices. And if we look at the futures in here, we're actually kind of flat to slightly up. For the S&P's pretty damn on flat, about a tenth up on the Dow and 2/10 lower on the Nasdaq. So markets fairly subdued on the equity side, but bond markets significantly lower in price, higher in yields. Let's take a look. We went into yesterday. I did say yesterday, even though we got the rebound was starting to go on, that the risk was still lower. We were below the trend line, so we did move significantly lower again. Remember we were holding here on the S&P above this 61.8% retracement, and if we go and take a look on the 15-minute chart. And here, remember, we looked at this trend line, talked about selling ahead of the trend line. Look, the market's gone down, rolled lower, back down from that trend line we were flagging. So this time yesterday, we were talking about this. Where were we? We were around here, right? Let me just get the timing here. We were right here. We were sitting right on the trend line on the webinar. And he said, can sell against the trend line, maybe a stop and reverse above this peak or above this peak here. And the market just went straight lower. We've gone back to the trend line, lower again in here. On the overnight, that was after the Bank of Japan, and now we've actually reversed up through that trend line. So that is significant. Okay, so the market's been reluctant to reverse that trend line. That trend line coming down from pretty much this time last week, from last Tuesday. That's post CPI. That's the post CPI spike high. So basically, 1 week ago, almost exactly. It's a really good trend line to get multiple touches here, and the market has reversed that overnight. Now I'm still negative going into this. Okay. And whilst below this little swing high that we had overnight, so that is on the S&P, that high there is 38, just below 38.55, like 38.54.75 is the peak there. Okay, so whilst below there, you're kind of still negative, but if it gets above there, and then you've got a string of peaks here around 38.63.64. Up through there, it starts to look a little bit more positive, and then it could open risk up to a move back up to here towards 38.99, 3900 kind of area, and maybe above. So you're watching out really for those peaks there, as I say, just above, just below, 38.55. Okay, so 38.54.75. Through there, it looks a little bit more positive. So, but whilst below there, probably still playing that from the bearish side. Similar story for the Nasdaq. We were hovering yesterday around this 61.8. We broke down through there lower and then bounced. So significant bounces. If we were closing the day here, this is kind of a positive candlestick for the Nasdaq. And going back to the S&P, similar here, right? You've got this kind of, at the moment, it's like a dragonfly doji, right? So it's a positive candlestick, almost like a hammer down here. If we were closing, obviously we're not actually open on the cash market yet, but the setup's slightly more positive in here going into this morning. I'm having had a sell-off and a rebound. So there's again the sell-off. There's the same trend line. Remember, we looked at this trend line yesterday. The market then broke down through this little counter trend line we flagged, away from the trend line. It's gone back up. We're not above the trend line. So that'll be interesting to see if the Nasdaq can get above the trend line. Remember, on the S&P, we're above this trend line, and it will also need to get above these peaks here and here. So I think for the Nasdaq, you need it above really 228.5, so 230 up to this little peak here at 255. So 11,230 to 11,255 is the key zone. That would also put us above the trend line for the Nasdaq. So watching those levels on the Nasdaq and the levels we flagged there on the S&P, above there would see a small base and upside prospects. Okay. Remember, we've got no particular data coming through today, so the market does look a little bit wobbly still. Okay. And as we said yesterday, right, whilst it's below resistance, we can play it from the short side. But if it starts to take out these resistances that I've just flagged there, then maybe going back to the upside. If it goes back down and starts heading towards the lows, it's likely to break and go significantly lower. Okay, so the lows and then those resistance levels I've just flagged there are the important ones to be watching. I'm going to wrap this up fairly quickly so I can prep us up for the Technical Tuesday. Let's take a look at some of the other. Let's take a look first of all at the bond market, and you can see the bond market significantly lower yesterday, but even more aggressively lower in here today. That sell-off obviously on the back of Japan. So you see in here like that contagion that these markets do impact globally. Okay, so that move by the Bank of Japan significantly affecting the bond market in here in the US. But again, we've had a rebound in here. And let me just get rid of all this old analysis. 1 second. So in here we have had a rebound though, but at the moment still looking fairly negative. I would suggest on bonds. This is the 30-year, and if we go and look, the trend line that comes off the peak in here from middle of last week through here. And then we have maybe through here, and then you can keep drawing these. But I think the last one I'm going to draw is really the most important. And there's the sell-off in here. So that you can see that really impulsive sell-off. That's the Bank of Japan there. Boom. Okay. That's the Bank of Japan, and then the market's grinding back high. So it still looks fairly negative. It's going to have to get at least back above, like really the breakdown point and these trend lines. So up somewhere around 129.03 to 129.12 to look more positive in here for the 10-year. Let's look at oil next. Remember, oil now, we are on the February contract, right? FGH, yeah. So on the February contract, consolidating, a positive consolidation yesterday, positive consolidation today. We do have that data coming through today. Remember, this afternoon, morning in the US. And if we look here, this trend line is going to be important. So that's, back above the recent peaks. But, before that, really, the two peaks in here from the last 2 days and from this morning. So if we zoom in on there, these peaks in here, let me get rid of all this old analysis. So all these peaks are queuing up here. Look, here, multiple failures. It needs to be above here to be more positive. And those highs are 76.64. Through there will look certainly more positive. And then that runs us up to this high here, and if it gets up above that high there, 77.84, I think, 77.83 up through there. So you got on the top side 76.64 and then 78.83 through there. Would then also see a reversal of this bigger trend line. Okay, if it takes out the high there. In fact, the trend line at the moment, coming in pretty much bang on where those highs are. So through the highs from early this week, from last week, would then be a much more bullish shift through the trend line as well. Let's take a look at gold. Sideways City, slightly more positive tone. It keeps rebounding from around the 1790, 1780 area and fading back from like 1820 to 1830 area. We're up at the upper end of that now. I don't really want to fade it. I don't want to be short, but equally it's difficult to go long given we've been in this range. No view. Wouldn't trade it. Wouldn't touch it. Okay. All right, guys, I'm going to wrap it up there. So remember to go across in about 14 minutes to the Technical Tuesday page. Yeah, please do go across there. It'll be brief, 30 minutes. Okay, won't be any longer than that. Please do feel free to ask questions as we go. I'm going to take a focus on momentum indicators, okay, and just the application. Not going to go into any real depth on various different indicators. I'm going to stick with one indicator and then just go through ways that you can use technical indicators or how I would apply technical indicators. Okay, so please do join us for that. Momentum oscillators going into just about less than 15 minutes time there, just over 10 minutes time. So I'll see you in the Technical Tuesday room. I do hope to see you there, guys. Until then, have a great trading day. Take care. Stay safe.